Hi, this is Tony Sagami, and Happy New Year to you. Hey, there's been a little bit of talk and statistics out of China that I think have some pretty important implications as to how we're going to invest some money. First, let me tell you what the Premier of China, Wen Jianbao, had to say. Let me give you some quotes from him. Maintaining a stable yuan has made an important contribution globally. We will not yield to any pressure of any form forcing us to appreciate. As I have told my foreign friends, on one hand, you are asking for the yuan to appreciate, and on the other hand, you are taking all kinds of protectionist measures. So that's a very clear signal that the Chinese yuan is not going to appreciate, and they're going to keep it at that artificially low area. On top of that, Wen promised a proactive fiscal stance, moderately loose monetary policy, and a stable exchange rate to keep helping its exporters recover and do well. As a matter of fact, you can tell the exporters are starting to do well because the industrial profits of Chinese companies are now higher than they were prior to the pre-crisis level, and they've increased by 7.9% over the last 3 months to $379 billion. So the export business is booming. On top of that, the Chinese banks in the first 11 months of this year loaned out a record $1.4 trillion. And that's double what they did in 2008. So that monetary fuel is what's behind all the growth in stock prices. And lastly, the real estate prices for the first 11 months of the year are up 5.7% from a year ago. So you still have that underlying real estate boom going on too. And that's why on Christmas Day, while we were opening presents and having turkey, the Chinese government raised its 2009 growth forecast from 9% to 9.6%. So as you can see, we're really close to that 10% double-digit rate that China enjoyed for the beginning of the decade. Now, what that tells me is that the Chinese economy is firing on all cylinders, and it's time to get in if you haven't already. There's two ETFs you could look at. One's pretty well known. That's the FXI. That's the FTSE Xinhua 25 Index. That's an index ETF with the 25 largest stocks in China. But there's another one you could take a look at, and it's the Wisdom Tree Dreyfus Chinese Yuan Fund. The ticker on that is CYB. CYB. If you do want to play that Chinese yuan appreciating, that'd be an excellent ETF to own. But the most important thing to get out of these statistics and statements from China is that the economy is booming and so is the stock market. So get on board in 2010 to make some more money than you did